Hi there, very good morning. Welcome back to ET. Now you're watching Market Cafe with me, Tanushka, Sarchar and Kristin, Sharma. Well, over the next 1 hour, we'll take you through all the global and domestic cues and also tell you about the stocks that you need to keep on your radar today before the start of the street trading session. But before that, let's get started with an eye on the globe and see how the US markets fared overnight. Well, Wall Street did take a breather overnight after a strong run-up with the S&P 500 snapping its 7-day winning streak. US stock futures were little changed last night. So that's about the US futures, but in regular session, the Dow fell about 90 points or 0.2%, whereas the S&P 500, that slipped about 0.4%, and the tech-heavy nasdaq composite, that lost 0.7%. All of this was weighed down by weakness in the tech stocks. The drag came from Oracle, which tumbled 2.5% after reports suggested that its cloud margins are weaker than expected and that it's losing money on some AI-related deals involving NVIDIA chips. Now, the update rekindled concerns of an AI bubble with comparisons to the dot-com frenzy of the late 1990s. Now, market strategists are saying that the rally may still have some room for the US markets, but they're warning that the sentiment has turned euphoric after weeks of gains that the market has seen. Meanwhile, the US government shutdown entered its second week, creating uncertainty for traders. Well, attention now turns to the Federal Reserve's meeting minutes due Wednesday, that is later today, that are expected to shed light on the central bank's next policy move. So overall, Wall Street's tone turned cautious overnight after an extended rally, with traders balancing optimism around AI with broader macro and policy risks. So that's about the US market. But Kristin, how are things looking on the crude front?
Not that exciting because markets are just digesting that OPEC plus outcome, and as of now we are getting to see that the crude is trading absolutely flat around that $65.5 per barrel mark when it comes to Brent crude oil prices. But you can't take your eyes away from the gold prices as well, because that is definitely having a great run up. Just yesterday wasn't just the record high level that we have seen happening on the gold prices, but along with that we have seen very good moves when it comes to the gold prices and surpassing above that 4,000 per ounce mark as well. But specifically with respect to gold as well as crude, lots been happening, and specifically with respect to the gold prices that we were just talking about, it was seen to be topping that $4,000 an ounce for the first time ever. The 50% up move this year reflects investors fleeing a weakening dollar, stubborn inflation and rising geopolitical tensions. Now, central banks led by China are buying aggressively, while the Fed rate cuts have made treasuries less appealing.
That's right. So that's about gold topping that $4,000 level as well now. Now, moving on, billionaire investor Ray Dalio says that the global economy today mirrors the early 1970s. High debt, inflation and fading faith in paper assets. Speaking at the Greenwich Economic Forum, the Bridgewater founder urged investors to hold as much as 50% of their portfolios in gold, calling it a key hedge against the monetary debasement and global turmoil that we are witnessing. Gold has surged up past that $4,000 mark, as I said. That's up 50% this year, as investors are seeking safety amidst fiscal strain and geopolitical tensions.
All right, but lots of other stories wherein the World Trade Organization has raised its 2025 global trade growth forecast to 2.4%, more than the double its earlier projection, signaling a short-term rebound. But the outlook for 2026 has darkened, with growth now seen slowing sharply to just 0.5% as higher tariffs and a cooling global economy take the hold. Now, the WTO warns that Trump's expanded the tariffs are weighing heavily on the trade flows, even straining the relations with the US allies like the UK.
All right.